We put 6 TradingView systems through our 4-metric evaluation: market adaptability, implementation simplicity, signal quality, and institutional relevance. Here are the first 3 results. The remaining 3 drop next week. We'll walk you through each system's methodology, strengths, and practical limitations with our unbiased opinion on each. All systems are presented from lowest to highest based on our ranking system. Created by only Fibonacci, this Pine script indicator identifies absorption zones through wick-dominant candle analysis at pivot points. The system detects candles where the wick exceeds the body size, marking areas where price was absorbed or rejected by market participants. It dynamically draws support and resistance lines from these absorption points until price breaks through them. The methodology focuses on wick-to-body ratios rather than traditional pivot highs and lows. For resistance levels, it identifies pivot highs, where the upper wick exceeds both the lower wick and the candle body, suggesting selling pressure absorbed buying attempts. Support levels work inversely, finding pivot lows where lower wicks dominate, indicating buying interest absorbed selling pressure. The system maintains arrays of active absorption zones, automatically removing broken levels. The indicator performs well during ranging markets where absorption zones create boundaries for price action. Traders can identify reversal areas by watching for multiple wick rejections at the same level. The box visualization option helps identify absorption clusters, areas where multiple absorption events occur within tight price ranges, often marking institutional levels. These zones frequently become future support after resistance breaks, and vice versa. Strategic implementation works on higher timeframes, where absorption patterns have statistical significance. The sensitive breakdown option provides earlier signals by using candle bodies instead of wicks for break detection, useful for aggressive entries. Multiple absorption zones at similar levels suggest institutional interest, making these areas candidates for limit orders or scale-in strategies. However, the system struggles in trending markets where absorption zones get quickly violated without meaningful reversals. Low volume periods can generate false absorption signals from thin order books rather than institutional activity. The pivot length limitation means recent absorption zones might not appear until several bars later, missing trading opportunity. Fast-moving news events can gap through multiple absorption levels simultaneously. Concept with market microstructure insights, but practical implementation challenges limit effectiveness. Wick analysis provides information, though distinguishing meaningful absorption from random patterns requires experience. Suited for range-bound markets, limiting versatility. Created by Lonesome the Blue, this Pine script indicator combines 4 distinct candlestick pattern recognition systems to identify reversal points at swing highs and lows. The system operates through modular pattern detection: wick reversal, extreme reversal, outside reversal, and doji reversal, each targeting different market exhaustion scenarios while requiring confirmation from pivot point analysis to filter false signals. The wick reversal system identifies rejection candles with oversized wicks relative to body size, indicating failed breakout attempts. The extreme reversal system detects large bearish or bullish candles followed by immediate reversals, capturing momentum exhaustion. The outside reversal system spots engulfing patterns that exceed average candle ranges, while the doji reversal system identifies indecision candles at swing extremes relative to a 10-period moving average. The system performs well during volatile market transitions, where momentum shifts create reversal patterns. The pivot point requirement ensures signals only trigger at actual swing highs and lows, rather than mid-trend noise, improving signal quality. The customizable parameters allow adaptation to different timeframes and volatility environments. Tighter settings for forex scalping, looser parameters for swing trading equities. The modular design enables traders to disable specific pattern types that don't suit their trading style or market conditions. The wick multiplier adjustment accommodates different asset characteristics: lower settings for trending stocks, higher settings for range-bound currencies. The body percentage and multiplier parameters can be optimized through backtesting to match historical reversal characteristics. The optional moving average overlay provides trend context for filtering counter-trend signals. However, the system struggles in strongly trending markets where reversal patterns fail to produce meaningful corrections. The pivot point requirement creates signal lag, often missing entry prices as confirmation arrives bars later. Multiple pattern detection can generate conflicting signals when different systems trigger simultaneously. The lack of trend filtering means the system attempts reversals against strong momentum, leading to premature entries in trending environments. The modular design allows customization, and reversal patterns have historical validity. However, the pivot requirement creates lag, often missing entries. Real-world application suffers from the system's inability to distinguish between trend corrections and actual reversals, a limitation in practical trading. Created by Just Uncle L as an adaptation of the price action channel, the gold line, scalping system, this indicator transforms a traditional binary option strategy into a trend-following framework by combining CCI momentum analysis with price action channels and MACD confirmation. The system operates through a tri-component approach: EMA-based price channels that define trend structure, CCI oscillator for momentum confirmation, and MACD background filtering to validate directional bias. The core methodology centers on 3 EMA lines, creating a price action channel: a 5-period low EMA, 5-period high EMA, and 4-period median EMA, the gold line. The CCI oscillator with 14-period length generates signals when exceeding +75 for bullish momentum or falling below -75 for bearish momentum, while requiring price to close in the signal direction. The system performs well during trending market conditions where the channel provides directional structure and retracements to the median line offer entry timing. The CCI filtering ensures momentum alignment before signal generation, while the RSI and trend direction filters add confirmation layers. The aqua and black bar coloring provides visual feedback for CCI conditions, making trend continuation patterns identifiable. The system works well when price retraces to the median line after breakouts, offering entry opportunities with better risk-reward positioning. Strategic implementation works on 15-minute charts with 2 to 4 candle expiry periods, though the system adapts to longer time frames for swing trading. The multiple filter options allow customization based on market conditions, enabling all filters for conservative signals or selective filtering for more frequent opportunities. The trend direction filter using the slow EMA prevents counter-trend trades during strong directional moves. However, the system struggles in sideways or choppy markets, where the channel lines converge, and CCI generates false momentum signals. The multiple EMA calculations create lag that can result in late entries during fast-moving markets. The CCI threshold levels may require adjustment for different volatility environments, and the system produces no signals during extended consolidation periods. Well-structured with multiple confirmation layers, but the contrarian MACD logic creates execution confusion. The CCI threshold approach works well in trending markets, though parameter sensitivity requires optimization for different assets. The complexity to performance ratio favors experienced traders. Top 3 trading systems drop next week. While you wait, check out our 300 trade backtest comparison of 3 proven strategies.